The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and thank you for tuning in right here at tfnn.com or tfnn.mobi. And if you have any questions, feel free to give me a call right now. You can reach me at 1-877-927-6648. Again, that's 1-877-927-6648. And just taking a look at where the markets are at right now, we got the S&P is literally flat on the day. We have the Nasdaq down 3, and we have the Dow down 11 points. Russell right now down almost 3 points on the day. We have gold down 16. Copper is down about 1% right now. Silver down a pretty good chunk there, almost 1.5%, a little over 1.5% down right now. Looking over at corn, it's down just a few points, which is about 0.5%. Soybeans moving pretty good, down 21 points right now, 1.5% on the day. And looking over at oil, it is up $1.22. So getting some nice movement on oil, up over 1%. Seeing a lot of chop in the indices though. Looking over at natural gas, barely moving. Pretty quiet day for usually very volatile natural gas. Euro dollar down or up 49 pips. Pound dollar getting pounded, down 119. Aussie dollar down 25. U.S. yen up 71 pips. U.S. Canadian is up 35, and U.S. franc is up 7. And that puts the dollar index overall in negative territory. Mainly the pound and the Aussie dragging that. They're down. There's dollar index is in negative territory despite everything. So basically, I guess the euro dollar being the heavy weighted part of that basket, pulling it up a little bit right there. But we'll see how it all ends up at the end of the day. And let's look at a few other things over in the market, see what's going on. As I talked about last week on the show, it's a pretty quiet week for news. And, there's a few things going on. We do have the Eurogroup meetings. They're happening all day today. And they're held in Brussels. Has the Eurogroup president, the finance ministers, the Euro member states, monetary affair, obviously Draghi, president of ECB Bank, all that stuff. And they discuss a whole bunch of financial issues. And, of course, they're going to talk about interest rates on the euro. They're going to talk about Greece and the ongoing issues there. Spain, being worried about what might be popping up over there. France, Italy, and Spain with the, bond yields ticking up and all that concern. And so it's one of those things you just got to sort of wait and see and hear what comes out of the meeting. There's not a whole lot to just, trade right on it. So you just got to keep up with the news on that. And, honestly, it's best just to pay attention to the charts whenever it's out like that at all. Because at the end of the day, it's always going to come down to your charts. And once the news comes out, well, it's probably already in the charts. So just looking at the reality there. And then, let's see, last night didn't really have a whole lot. China and Japan, on bank holiday yesterday. China on bank holiday all week this week. So that should add to some interesting markets in itself, just not having them playing in the markets as normal. And then let's see over here what else we have going on. For tomorrow, you're going to have the CPI coming out of Switzerland. So that's a U.S. franc trade. That's 3:15 a.m. Eastern Time. And CPI number, in case you're not sure what that is. Basically, it's the simplest way. It's the change in the price of goods that consumers pay. So, you can call it, basically it's inflation. Consumer Price Index. And it's the earliest major inflation data released by the country. So the CPI month over month. So it does have more volatility to it. Therefore, it is considered a higher impact report. And you want to be looking at that right there as a potential, U.S. franc trade if you're an early morning trader. And pound dollar is going to have its CPI coming out at 4:30 a.m. tomorrow morning. So it's going to be the year-over-year report. And it's actually considered the most important inflation data for the UK. So the reason is because the CPI year over year is actually what the banks use or the central bank uses to target its inflation rate. So basically, is inflation on target? Is it slow? Is it fast? Whatever. They're projecting 2.8% would actually be an inflationary uptick from what they had previously. And then we can go over, we can look at what else. We're going to have the Swiss National Bank chairman. He's going to be speaking. His name's Thomas Jordan. He'll be speaking at 5 a.m. So about an hour and 45 minutes after that CPI number comes out. So that could have some further impact on the U.S. franc there. And then let's see, we'll have a Bank of England inflation letter. It's not timed. So just to be aware that that is going to be released. But that CPI is going to be the big number. One thing I want to make you aware of on the pound dollar at 430. The CPI is coming out, but so is two moderate impacts, PPI and RPI, and then there's medium, or actually low impacts, HPI, PPI, output month over month, and core CPI. Doesn't really matter what all that is. What does matter is that there's 6 reports coming out on the pound at the exact same time. Okay? So expect some major volatility in the pound, and that's when you may want to be, taking a look at potential strangles on any kind of market, but especially the pound. So if you are trading at 4:30 in the morning, that's the market to be focusing on. It should have some nice solid volatility going on. Now if we look on over and check out after all that comes out, then in the morning the Bank of Canada's governor is going to be speaking. His name is Tiff McClam, and he is going to be coming out doing a speech and talking about volatility, interest rate, clues, things like that. Basically, everybody's going to be looking to see. He's actually going to be testifying before the House. Oh, it's Mark McCarney. I'm sorry. Mark Carney is going to be speaking. He's going to be testifying with the senior deputy governor, Tiff McClam, before the House of Commons on finance. So basically, they're going to drill him about a bunch of questions, and they're going to have to answer them. And as you can imagine, anything they say will impact the U.S. Canadian. So that could definitely have an impact on the U.S. Canadian, depending upon what comes out of their mouths, but it's not really a number-based thing. So, again, making it very difficult to trade. Then Draghi is going to come out and decide to move the euro tomorrow at 10:30 a.m. So he'll come out, he'll start talking, sort of like Bernanke talking here. And so there's your nice little euro-dollar move before lunchtime. You can go in and take advantage of that. I'm sure the euro will be moving quite a bit just based on the U.S. franc stuff coming out and based on all the pound information coming out. But, obviously he is going to be moving the euro dollar. Just be aware of it. It doesn't even mean you're trading it, okay? But it does mean you're aware of it. Because, if you're in a position, he comes out, he says something, it could totally just slam against you. So let's say you're in and you're profitable, you may want to be tightening your stops a bit before he opens his mouth. And sort of, liken this a lot of times to, it doesn't matter how good of a bill of health you get at the doctor. If you don't look both ways before you cross the street when you walk out, you can still get hit by a bus. And that ain't going to do, I don't care how healthy your heart is, it's still going to knock you out, and maybe permanently. So you want to know when those buses are coming across, and that's what the news is good for. It lets you know when things are happening, so you know when you need to be tightening your stops. And we'll have a couple other reports coming out, but most of them are low or medium impact, and we're really looking for the big ones. And then, of course, tomorrow night, President Obama is going to be doing a State of the Union address. So it'll be interesting to watch and see exactly how that plays out. But I'm sure he's going to be saying we need to raise taxes and et cetera, et cetera, et cetera. So there's not enough taxes to pay for everything he wants to spend. But nevertheless, that's, I'm sure, what we're going to hear a lot of. And we go on over, we can check out a couple other things. What do we got going on Wednesday? And let's see, there's going to be a couple pound reports, inflation report. Governor King's going to be talking again, 5:30. We're going to have a lot of, we have a couple high impact on the core retail and the retail sales right here in the U.S. at 8:30. So that could be some gold reports. Probably more is going to be index trades. So simply because, that's not so much your unemployment stuff, your non-farm payroll stuff, that's really your gold trades. Core retail sales, that's probably more of your indexes you're going to want to focus on. And, the impact on looking at a lot of currencies isn't huge on a good chunk of the currencies. So, like I said, I'd be focusing more on the indexes. So you could be strangling those or just be aware that the report's coming out. And then they'll have, there's literally just like one after another reports coming out on the U.S. pretty much almost all morning. There's another one coming out at 10. The mortgage delinquencies will be released Wednesday and Thursday throughout the day. The crude oil inventories, that'll come out at 10:30. So if you're an oil trader, you better know when that report comes out, okay? So every Wednesday at 2:30, unless there's a holiday or the market's closed for some reason, then they may bump it to a Thursday, every once in a while a Friday. But almost always a Wednesday. And let's see here if an MC member is going to be talking. But again, all these medium, low impact. Yen is going to have some interest rates, but we don't know what time. So could set up for a really, really good trade, except for we don't know what time. So, just be watching the yen if you want to be trading in the Asian session. And it's probably a trade that will carry out through to the next day. So just be aware of that. You may want to use something like a strangle on binaries that go through to the end of the day, or maybe a straddle on spreads. Actually, you'd have to do a strangle on binaries because the spreads will expire at 11. Unless you want to stay up and put another one on at 11 and then another one on at 7. And then hopping on over and looking at, Thursday morning, just trying to give you up to date and ready to go. Quite a few ECB Euro reports coming out Thursday morning, but they're all medium impact. But there's a lot of them. So it's like a 2, a 245, a 4, a 5. So a lot of different reports coming out. Then unemployment claims will come out here in the U.S. on Thursday morning. And they've been sort of a joke lately, just the way that they've been messing with the numbers. But there hasn't been as much of a response until recently. It's picked up a little bit, simply because the Fed has tied the interest rate to unemployment itself. So it's really better than expected. And what's weird is, if it's really good, that could be bad, because that could mean the Fed would be more likely to lower interest rates. But if it's really bad, that could be good, because it means they keep their easing going. I don't know. But it's when the good is bad and the bad is good, it's time to watch out. Looking on over, let's see, we'll have if you're a New Zealand dollar, dollar New Zealand trader, New Zealand dollar trader, retail sales coming on out, 4:45 that night. And so high impact there. And then on Friday, to wrap up the week, we got the retail sales coming on out of Britain. So that should be a good report for you to be able to trade, like I said, if you're an early morning trader there. And then coming on over to the U.S., we're going to have a U.S.-Canadian report, a couple medium impact, so maybe a half deviation strangle at best. And then looking on over to the morning, we'll have the big impact report we're going to have is the preliminary University of Michigan Consumer Sentiment Report. But there are 7 U.S. reports. Or I guess 6 U.S. reports, 1 Canadian report coming out Friday morning. So that could actually make the U.S. Canadian a decent trade, just because the Canadian does have a little bit of impact going, and the dollar should have quite a bit being impacting it, just with a whole bunch of little reports coming out one after another after another. All right, well, that wraps up our fundamental outlook for the week. Stay right there. I'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And there's a few different things on the market right now. We'll go through and we'll check out our nations. By the way, I'm talking quite a bit about Nadex on here when you hear me talk about strangles and straddles. I'm not talking about long-term trades. I'm talking about short-term trades. Hop in and have a good risk-reward, have the ability to trade. And there's different binaries out there. We'll talk a little bit about those today. There's betting binaries, and then there's trading binaries, okay? So there's these offshore brokers where you put on a trade and you say, hey, it'll be over under this at this price like in the next 60 seconds. And if you're right, you win. If you're not right, you lose. And you can't exit the trade, and the payout is horrible. It's like they'll pay you, say, $70 if you're right, but they'll take $100 if you're wrong. Okay? That would be betting binaries. All right? So not really thinking that's a good idea. Trading binaries, however, can be great. I love to trade binaries, and I love to trade spreads. And I'm not talking about vertical spreads and debit spreads and credit spreads and diagonal spreads, and all that can be fun. But there's a unique type of spread, different than calls and puts and everything, mainly because you have 1 day or maybe even 2 hours or 30 minutes when they're always expiring. Okay, like every hour they have new ones coming out. So they're always expiring, and you can hop over and you can trade them. And since they're always expiring, why is that good? Well, without getting too complex on the option side, but for you option traders out there, okay, your gamma is through the roof. So you're getting a delta of basically 1. As soon as it's like even a little bit in the money, like a tick, okay, on these spreads. And you have completely limited risk, so you can go in and, literally get 1,001 leverage on a euro-dollar trade. You can make $1 for every pip the spread moves up, just like if you're doing, say a mini lot. You can't get stopped out of the trade, so you have until expiration for the trade to actually be profitable. And you don't really have a lot of theta because it's expiring today, So you don't have the theta to worry about. You don't have the delta to worry about. The vega, implied volatility impacts options that expire further out. So, like if you have an option that expires in 6 months, IV is going to be a lot bigger impact. The vega will be larger. If it's going to expire in the next 12 hours, IV is going to be a lot smaller because the ability for it to move in the next 12 hours is a lot less than for the expected movement over the next several months. So you're not having to deal with vega. You're not having to deal with delta and gamma and theta, and obviously you don't have to deal with rho pretty much regardless. But with all that put together, it really does add up in your favor, and creates really just a great trading vehicle. And so what you want to do to check this out is, one, go to Nadex, right there on the tfnn.com homepage. Just click on Nadex, and then click on Our Products, click on Demo Account, and fill in the information: username, first name, last name, phone number, email address. Click Apply for Demo. Then what they're going to do is they're going to send you an email with the password so you can log in. I do recommend as soon as you log in, you go to My Account Settings and you change your password so you'll remember it. Also, they give you a 2-week demo, but you can get that extended basically indefinitely, at least for a year. Shoot me an email. My email's over there on the website. Shoot me an email, and I'll let you know how to get that extended. Now, to open a live account, just click on Create Account. It only takes $100 to fund a live account, so there's none of these day trading restrictions like you have to have 25 grand in stocks. You can only make so many turns in so many days, all this other stuff. And there's no broker fees, just exchange fees. So you save on the broker commissions. You don't have to pay that. And but you can fund an account with only $100 in the account and actually start trading. And of course, I recommend that people do, once you understand it and you're trading it, you're probably going to want more than $100 in there. But you can place trades for $10, $20, $30, $40, $50 easily. And all the time. But another thing is you don't have exercise risk. No gold's coming your way. Unfortunately, you don't have to deliver any cows. No barrels of oil being delivered on the front step. It's not exactly how it works, but still, you don't have to worry about delivery. No stocks being assigned to you. No futures index future indices. Index futures, actual contracts being assigned to you when you have the call or put. So it has settlement at expiration. Let's say it expires at 4:15 today. As soon as it settles, it's cash settled. The money's instantly put in your account. Or you can close it. The money's instantly in your account and available to trade. So, if you're profitable in that trade, you close it out, boom, right there. And on the spreads, you don't have to, it's not an over-under total loss thing. You go in, put a trade on, you can sell it, you can buy it, So, and the difference where you sold and you bought is your profit and loss. The only difference is your profit's capped, okay? At, let's say if you're buying it at the ceiling, but you may be talking 30 points away on the S&P E-minis. All right, so if you're worried about a 30-point cap, come on, really? But the big thing is your loss is capped and maybe like a couple points away, which is even better. So stay right there, folks. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And going through right now, just looking at a few things. One thing we were talking about is the spreads and how often you got to be checking those out. And if you're new to trading these spreads, they can be a little complex. They're not, honestly, they're not that hard. But it does take a little bit to get used to them. And so one of the things I do recommend is go over and check out our 2-week trial right here of the Diagnostic Trading Box Spread Analyzer. It comes with the tutorials on the spreads, tutorials on the binaries. It also includes the deviation levels that I post every day. Okay, so you can go over there and you can check that out, and you'll be able to get immediate access. And this is basically how it works. Let me show you. So you come on in, and it's going to go, okay, so how does everything work, you know, sort of step by step. And you got tutorials, so getting started, and then a step-by-step application and strategy, who's Nadex, goes into the spreads, the binaries. You have a help section for asking all the questions you want right here. You can just submit the questions right to me. Also, you get access to the deviation levels, and we upload these about 7:15 every night for the next day. And the deviations are based on implied volatility. So how far does the market say that the market will move today? Okay, and instead of using like pivot levels and standard deviations and ATRs and all that, which are all based on previous price movement, this is not looking at previous price movement. Okay. This is looking at yesterday's settlement price, okay, so where did the market settle at, and then it's taking the implied volatility out of the underlying options. We take 16 options, pull out their implied volatility. We then weight them and put them into our own VIX type formula, and then we tie it into a intraday deviation formula. The combination basically results in the market telling us how far the market is looking at moving on any given day. And it's very helpful for setting profit targets, and great for selecting, strikes if you're looking at binaries. If you're looking at spreads, how far do you think the market's actually going to move? Because you got to look at, what's my risk reward on the trade? And, we always want the market to, crash down or fly up to the moon, but in reality, how far is it going to move on any given day? And so this helps out with showing that, any given day, how far the market will move. And we've added a lot in here. We've added in the ability, now you can highlight over, it shows you what Nadex contract, or what underlying market the Nadex contract's following. Like the US 500 is right now following ES0313 or ESH3. So that makes it nice and easy for you. And we've broken down the spot FX. So, and we go down here, and we've actually put in the front and back month futures contracts as well. So that way you can use that, and we'll keep adding in more. So we're going to add in like 40 futures and a whole bunch of stocks and ETFs and indexes as well. So we ought to have over 3,000 different instruments in here when it's all said and done. And of course, we'll clean it up a little bit and have a little search feature and all that stuff where you can have sort of like your favorite ones that you want to follow as we keep improving on it. But it's pretty good. We get constant, great feedback. Now, other thing you have is you have the scanner. So right here on the scanner, you can go in and choose the market you want to trade. Okay, so say you want to trade the Aussie dollar right now for whatever reason. Then you can go in here and you can filter it out. So instead of it showing, let's just say everything, like right there, there's all the different spreads that are being able to trade. You can say, I want to, let's just say, buy the Aussie dollar. Okay, and you go in and you do, I want a 1-to-1 or better risk-reward ratio, and I don't want to risk more than $100 on a trade. It's going to drop all the trades out that don't qualify. There's basically 2 that do. And so it makes it pretty simple for you. Right here you have one with a reward risk ratio of $11 profit potential for every dollar at risk. You're risking $8, has to move 7 pips to be break even. You can make up to $89 on it. Not a bad trade. So this one right here, lower risk reward ratio, expires at the exact same time, can make a lot more money. Okay, but it's also risking 3 times as much. So you're risking 23 to make 173. Well, this one you're risking 8 to make 90. So if you actually did say 3 times as many of these to basically equal it out, this is actually better. Well, how do I know that? Just by looking at the risk reward ratio, 11-to-1. Okay. And now one of the big things I tell people to always pay attention to, and this, by the way, updates live. You notice if one falls in the classification, it'll throw up on there, is always pay attention to how much time there is till expiration, okay? And then pay attention to how far it is to break even. Because sometimes you'll see trades on there that are like, massively out of whack, and they look great because the risk looks so low. But the market's moved so far that it's worthless. I mean, we can go over here. I probably pull some up on the pound dollar right now. Let's see here. Okay, this one right here, $5 risk. Looks fantastic. Can make $292. This is a 60-to-1 risk-reward ratio. Has to move 21 pips before it's even break even. So before I even get my $5 back, it's got to move 21 pips. I don't like that trade. Okay, so before I look at risk, I look at distance to break even. And that's just, there's a little bit of time premium in there. It's a derivative product. But, 6 pips, small price to pay for only having a $10 margin, which would be a couple $100 margin if you're doing spot FX, by the way. And it'd be, twice that if you're doing the futures. And so, $10 margin, a $10 risk. I can't be stopped out. And people go, well, what about the bid-ask spread? I mean, that's 3 pips instead of, like, say, 1.5 or 2 pips on pound dollar. I don't care that the bid-ask spread is 3 pips. My risk is $10. I can't be stopped out, okay? I don't care it has to move a few pips to get to break even. My risk is $10. My margin is $10. My leverage is over 1,000-to-1. I can't be stopped out. I'll sit next to any spot trader on any given day of the week, and I'll trade every signal they come up with, and I'd be really shocked if I didn't come out way ahead, unless they're scalping for like 5 or 10 ticks at a time. Which we probably still come out ahead because I just wouldn't get out when they do the scalps. But, very few scalp traders are very successful. Now, if you are going to scalp, let's say you are a scalp trader, okay? Well, here is a pretty cool idea for you. You go in, and let's say you buy this pound dollar trade, okay? And it goes up a few ticks. You're like, okay, that's cool. I'm up a few dollars, whatever. Now, you can start scalping the pound dollar because you're fully hedged. All right, so you sell a mini lot, you buy a spread. You know, you can sell 10 mini lots, sell a lot, and buy 10 spreads. And when it drops 5, 10 ticks, whatever, you take it off. Well, you've covered your spread cost. That was easy. Okay, 10 ticks, boom, done. If it goes back up, you can sell again. Goes back down, take it off. Just repeat the cycle over and over again. But now your scalps can't get away from you. If you've ever been or are a scalp trader, you know your scalps can get away from you. You can have like 40 winners and 1 loss, and there goes the day. Okay? So, and yeah, of course, you got to have good risk management. You have to have good discipline, but things happen and you happen. So, if we're just being honest with ourselves. So, this allows you to not get in your own way by moving your stop, because you have a stop all the way up to 58.20. Okay, so you have a massive stop. You have a 150 pip stop loss, but you only have a $10 risk. You only have a 10 pip risk with 150 pip stop loss because you have a hedge on by buying the spread and selling the pound dollar. And what we do in here is we actually go in and we lay out. If you sell the pound dollar spot, you buy 1 mini lot. So we tell you what the exact ratio is. We do that on each one. I'm like US 500. It'll say if you want to hedge or scalp or whatever with this, sell 1 ES, buy 5 spreads. You know, if you're doing the Wall Street 30, it'll go over here and tell you, you know, you want to sell 1 and buy 5 of these. Let's say you're doing the Russell. Then it'll tell you want to sell, you know, a Russell and buy 10 spreads. So we'll give you the ratios for each contract if you want to go in and hedge with them or scalp with them. But it makes for a very cool scalping strategy, a great hedging strategy. And a lot of times people want to complain because of the, you know, the cap on profit. I'm like, seriously, you can make 150 pips? You're really worried about only making 150 pips on pound dollar in a day? But sometimes they are, okay? So if that is your concern, then just do what I just showed you, okay? Go in and scalp it. Or, I'm not scalp, but hedge it. Because then, if let's say you're short the pound dollar and you're long the spread, and the pound dollar drops 200 pips, you get to keep all 200 pips less the, you know, 10 pips you gave up in your, you know, your risk there on the spread. So there's no cap. They call it basically the open box, okay, the uncapped box. So by combining the underlying market with the spread, then you actually don't have a cap on your box because you can make money as far as it goes. And by box, I mean, I call these box spreads because you got a floor of a box, 56.70. You got a ceiling of the box, like 58.20. And then you got the price you get in at, which is, you know, in this case, say 56.79. And then you have the expiration time. So price you get in at is the left side of the box. Expiration time, 2 o'clock, is the right side of the box, or 3 o'clock. And floor and ceiling. So if you put the floor and the ceiling, the entry and the exit, entry price, and then the exit time, that's the maximum exit time. Now, you can get out anytime you want to before then. Okay, so you can get in now and get out in 1 second. You get out in 10 minutes. Get out and get out in 1 hour. But, you know, if you put the box on for maximum expiration time, just on the chart, just drawing it on there, then you'll actually see the box. And what I'll do is I'll show you an example of a box over here. And we'll pull one up, okay? So right here, we'll throw the pound dollar on, which has just been moving like crazy today. And then we're going to look at, we got a 56.70 to 58.20 expiring at 3 o'clock. Okay, so let me separate these two screens right over here. And 1 second, I'll pull this back up. And we'll get this going. Got the Windows shake thing happening for us there. And let's see here. Okay, so hopefully that's showing up over there good in Tiger TV. And so now that we have that up, then what we're going to do is we're going to draw this box. So it's pretty simple. Most charting programs have this ability. Just right-click or something like that somewhere on there. And let's see here. Oh, let me reset this right here. I heard it's not coming through how it's supposed to. There we go. All right, so it ought to be looking good right about now. So, I'll reset that for you. And verifying. We got a low of 56.78 and or a low of 58.20. So we're going to go in. We're going to add our drawing tool on here. We're going to go to rectangle. Okay, and then we're going to draw it from 56.70. So right around here. okay, up to 58.20, which is going to be pretty high. And then what we'll do is we'll actually edit this box here. Makes it easier if you just sort of draw one on there and then you can put the details in. So we'll make this 56.70, and we'll make this one go up to 58.20, and then we'll make it expire at 3 p.m. Okay? So now we got our box. All right? And I can go in right now. I can buy this at 56.80. It's about 10 pips above the floor and 4 pips away from where the market is. Okay? So you're basically paying 4 pips for what you could call basically a premium, but I mean 4 pips, $4, okay, to not have to worry about a stop loss and to be able to risk a lot less money. And so basically that'll put our entry right about here, okay? So we got to move up a few pips to be break even on the trade. And I can only lose money from here to here, but I can make money from here up to here, all the way up to the top, all right? No matter what the market does, okay, if it goes down and then goes up and then goes down and then does this and then, does this and then does this and does this, and it drives me nuts the entire time. Then let's say it expires right there. You know what? I make money. Okay? Well, what happens if it expires, that's above where we got in. It's above 56.80. But let's say it expires, right where we bought it. I get my money back. Okay? Well, what if it expires like 5 pips below? Okay, it expires, we'll say, at 56.75. I bought it at 56.80. Well, I lose $5. I get $5 back. Okay? What if it expires down here? I lose $10. All right, bought it at 56.80, floor's 56.70. Well, what if it expires right at the top? Awesome. Okay, well, then I basically made $140 on the trade. Well, what if it goes all the way up here? Well, then I made $140 on the trade. My profit's capped. Okay? And by the way, 140 pips on a pound dollar on any given day, you should be jumping for joy, not upset that you only made 140. But like I said, there are, you do have choices. So we could actually take this same box and we could flip it around. All right? So let's do that. Let's flip it around. Let's show you what I mean by this whole hedging idea. If it'll let me select the box. There we go. All right, so we have, what we're going to do is we're going to flip it, and we're going to sell the box below instead of buy the box above. So we got 56.70 to 58 there, so let's go ahead and go, if it's 150 pips wide, then that would be 56.20, 55.70. Is that right? Something like that? I think it's a little lower than that, actually. And let's see here, 56.70 ceiling, 55.20. No, that's right. Okay. So it's got it squished so much. So right there. So what I'll do is I'll show you how to combine the two together when we get back from break to do what I call the ultimate hedge strategy. Okay? All right, we'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Just doing a quick summary on what I call the ultimate hedge strategy. There's a whole video that teaches you how to do this inside the members area there. And what I did was we flipped around the box. We said, hey, we want to buy the pound dollar. So, it's pretty late in the day, so we don't have a big rally expectation there. But just trying to make sure I give you a good example. So we actually picked this box right here. Start where the market's at, say 56.70 is the floor, 55.20 is the ceiling. And we can go in and sell for about 56.67, okay? So very low risk, a few pips away from being break even on that spread by itself. And one of the things we do as well in here, and some people don't even really notice this feature, don't take advantage of it, but it's a pretty cool feature, is we go in, we actually show you the hedge itself. So that way, when you're looking at the market, you're trying to figure out exactly what it is that you want to do, then you can see it right there. So what we do is we go, hey, if you wanted to hedge this trade, okay, then your total risk on the trade would be $9. You have 5 points to break even, and what you do is you buy 1 pound and sell 1 mini lot. Now, of course, you can increase the quantity all you want, but that's just the ratio. So not only do we show you outright, like if you just went short the pound spread, but we also show you what happens if you went long the pound and short the pound spread itself. And so the whole trade has about $8 risk on it. That risk is the difference between the $5 risk in the spread, okay, plus it doesn't really kick in until, you get to the price where you sold it at, which is right about here, okay? So, you have a few dollars risk, like I said, about $5 risk with all the fees and everything included. And then you also have, a few dollars risk before that. It's going to, hedge you. Okay. So, meaning the spread won't really start making money until it gets below 56.67. And so with that combination, what you're able to see is that the market can move down, and then what happens is the spread starts making money. Okay? So spread's making money while the pound dollar spot is losing money. All right? Pit for pit. Boom. There you go. All right? But then it flies up. And when it's going up, then what you can do is you can make money all the way up. You have no cap on your box because you're not going directionally with your box. You're going directionally with the spot, but you're using the spread to hedge you. Okay? So again, you're using the spread over here to hedge you on the trade. And it's a pretty cool, simple setup. And like I said, one of the things you could do is you could even use it to scalp with. So you could go in here and say you're selling the spread. You could buy and then sell, like pound dollar. Drops down again, you could buy and you could sell. Drops down again, you could buy, you could sell. Okay? So when it's in the money, when that spread's in the money, you can go in and start taking advantage of that and scalping with it if you wanted to. And if you get stuck in the scalp, you're hedged in the process. So it makes for a lot more relaxing way to scalp trade. And if you just want to directionally trade, trend trade, swing trade, you can combine the two together. Or you can just do, you can say, I don't want to do the spot. I just want to do the spread. Fine, you can do that. Or you can do one of the other things I'm talking about all the time is you can do a straddle where you can buy the upper one and sell the lower one. And as long as it finishes, on either side of that, then that works out great for you. And we definitely had enough movement to have some nice straddles on today. As you can see, it went down, touched on that 2 deviation, and just hesitated right there and sort of went flat after that point. So trade working out very, very well if you were straddling from this morning. And, you also could have done a strangle with the binaries. You could use the different strikes to choose binary strangles, which is like, say sell one around here around 5,700, buy one up here around, 58.70. And so there's a lot of different ways, a lot of cool ways you can combine it, depending upon what you want to do, what your market view is. If you have a directional bias, if you like to scalp, if you don't have a directional bias, you just want to trade both directions. So all that's possible with very low, very defined risk. And when you're just doing the spreads, very, very low margin, insanely massive leverage. So hopefully you picked a few things up today. And look forward to seeing y'all tomorrow. Stay tuned right here. We got another great show coming right up for you.